Switching gears here and zeroing in a little bit on earnings season, which is kicking into higher gear this week. Investors eagerly awaiting results from big tech stocks. That's after the Nasdaq was dragged down by second quarter results from Tesla and Netflix last week. Tesla's recent pullback overshadows the company's beat on the top and bottom line. And it got downgraded this morning as well over at UBS. So interesting there. We're seeing those shares pull back in pre-market trading. Mark Newton is still with us, Fundstrat Global Advisors, head of technical strategy. Mark, we wanted to sort of dig into some specific names a little bit, and Great. Tesla is one of them. Obviously, it is of huge interest to people. So what's the setup look like after what we saw last week?
Well, look, Tesla has had an incredible rise. It's rallied over 100% just since the middle part of April. So it's difficult for stocks to go just in a linear direction straight up without any sort of correction. So it has gotten near-term overbought. There were some instances of the stock price moving up, but momentum has not followed of late. So that's a technical concern that sometimes means that the stock might need to consolidate. So it hit $300, and recently we've seen a little bit of backing and filling in the last week. They've downgraded today. It's down to 256. So it's getting closer to an area where investors might want to consider buying dips technically. But you have to realize that the stock is incredibly volatile compared to many other stocks. I mean, it turned negative last year. Elon Musk sold shares back in October, November. The stock literally got cut in half. It went down to almost 100. And so now here it is at 256. So still, a very, very good rally. And if anything, on an intermediate term basis, it's actually gotten a lot more bullish for between now and 2025, I would argue. But these are just near-term concerns on the stock being downgraded. So I tend to see the stock as short-term negative, but overall on an intermediate-term basis, it's still quite attractive to me.
I'm curious, when you talk about a stock like Tesla that is so volatile,
right.
And that sort of, one guest we had last week called it a faith-based stock in terms on the part of its investors, is it harder to then do technical analysis on a stock like that, or is it less useful in any way?
No, I would argue the opposite. I mean, technicals really show signs of the stock emerging from breaking down in ways that the fundamentals might not always justify. And so it's really important to study momentum and trend analysis and volume. And, this can help to put investors on the right side of where the stock is going to go. I mean, we all hope that the stock was higher in the long run. There are certain times when the technicals line up with the fundamentals. And recently, technicals have started to turn down in the short run. So all those are important. And Tesla, as you said, it's a stock where everybody has this, they want to invest in a wonderful car and a visionary leader similar to those with Amazon and Apple and the others. And so, sometimes the stock doesn't always reflect what the fundamentals might say. And so that's why technicals are, incredibly even more useful during times like this.
And so we heard a lot about the buy on the dip narrative, typically during more of the bullish kind of long-term rallies that we had seen. Are we back in the throes of that right now from your perspective, or is there something else that investors should be looking out for?
With regards to Tesla?
With regards to Tesla or any name that they see a massive pullback or a correction or a dip in to try and get in with that same type of buy on the dip mentality? Well,
buying dips within uptrends is certainly very appropriate and useful. When stocks start to break down to new 52-week lows, oftentimes, investors make a case for value, and the stock price normally has a lot of downside momentum, and it won't always stabilize where fundamentals might justify that it should. And so it's important to take note of, stocks starting to break out of longer-term downtrends or, breaking down from longer-term uptrends. It really makes a case for studying trend analysis and really helping to take the blindfold off as to how the stock might move compared to the fundamentals.
And I guess the reason why I asked that is because part of this trend, too, has been with a hype phase of AI that's been baked into some of these stocks as well.
100%. Certainly a theme I think will be with us for years to come. Quantum, AI. Look, these are all themes that are wildly bullish probably in the long run, but in the short run, you really have to try to strip the emotion out of the process and realize that stocks can and will get overbought and can correct and sometimes provide opportunities when they pull back. So
I'm curious about the setup for some of the other large cap tech companies coming into this week. Mm-hmm. When you look at the likes of an Alphabet or a Meta, as examples, are there any of the big cap techs that stand out for you as having a particularly interesting setup going into earnings?
Most of the large cap technology stocks continue to look very attractive on an intermediate term basis. They really have shown little to no signs of weakness. I would say Netflix is one stock that has started to roll over, but Microsoft remains in great shape. It's recently broken back out to new all-time high territory. So when investors say they want to fade the market or they're worried about stocks rolling over, when you see stocks like Apple or Microsoft at new all-time highs, it really makes it difficult to sell stocks that have just emerged into new all-time high territory. Normally, that's a time investors want to be owning, those stocks and, managing risk, looking for times when that might prove to not be the case. But for the time being, it's still, these are still quite bullish names.
Is there a basket of picks that you would look at going into the tech portion of this earnings season and say that's, an area of the market that investors just can't live without some type of exposure to in their portfolio?
Well, with regards to technology, you do have to be a little bit more selective after the run-up we've had. Semiconductor names, to me, still look very appealing. They've actually outperformed many parts of tech hardware and software. I would prefer buying some of the stocks that have started to show mean reversion off the bottom, semiconductor names like Intel versus reaching for an NVIDIA at 450. And so some of them are now showing technical signs of being quite overbought and extended in the near term. So it depends on one's time frame and risk tolerance as to whether you buy a stock at new all-time highs or you wait for pullbacks. I like technology. I think it's going to be a driving force for second half gains. I think that interest rates, in my view, are still going to show weakness in the months to come, so that should be supportive of technology. But there are many other areas that are just starting to emerge, and things like healthcare. We're seeing a rotation into more defensive names, and that can be something to pay close attention to.
I want to talk about another area that you recently highlighted in a note, and that's solar, which is interesting to me, saying that you talked about how some of the recent activity in these names has been more constructive. So what is that setup like?
Well, we have seen, the ETF for solar names, the TAN, has broken out of really longer-term downtrends. And the same goes with the energy sector as a whole. But that is more promising to think that we're going to see a better second half and we can see a recovery at a time when people remain very skeptical about energy and its prospects. So, the sector largely has been trending down since last November, and we've literally just emerged. So, for those like myself that look for good risk rewards, energy, in particular solar energy, makes a lot of sense to consider. But you also have to be selective within that group.
I was going to say, is TAN the way to play it, or do you do individual stocks?
First Solar, to me, is the cream of the crop. That is the best stock within solar energy, in my view, of the ones that are large and liquid. Other ones like Enphase Energy or SolarEdge are certainly appealing. They're starting to work as well, but they're just not as strong as First Solar.
Okay, Mark, thanks so much for coming in.
My
a lot
pleasure.
of actionable stuff for people who are watching. Really appreciate it.
Wonderful. Thank you.
Mark Newton
Great
is
to be here.
Fundstrat Global Advisors, Head of Technical Strategy. Thank you.